The Vitamin Shop was a company founded in 1977 whose goal is to help people achieve greater health and wellness goals through its 775 plus retail stores and additional franchises, along with its online presence, which carries over 17,000 different brands of nutritional products. The company operates in both the retail and manufacturing areas, and they provide custom manufacturing and private labeling for various vitamin, mineral, and supplement-based products in addition to their own product lineup. Some of their competitors include GNC, USANA, and Herbalife. Annual revenues in 2018 were around 1.11 billion, and the company's net profit was approximately 13.54 billion in the same year. However, the company is still struggling to compete with its online retailers such as Amazon and its other competitors who offer a wider range of products and services at lower cost.
First alternative that our team would suggest for the Vitamin Shop would be to shift more of its focus online. With over 775 stores, the Vitamin Shop has a very large presence in most of the major markets across the country. However, in the era of online shopping, the Vitamin Shop must work to adapt to that strategy as well. The second alternative that our team has developed is to close underperforming stores. While we acknowledge that this would reduce revenue in the short term, it would not necessarily impact profit too much as the underperforming stores aren't very profitable to begin with. The approach that we would suggest in order to determine which stores to close would be to look at the bottom 10% of stores across the country in terms of sales performance. The third alternative that our team proposes is to partner with large stores or chains. Doing so would better market their brand by making it more known as a brand trusted by the larger stores of the customer's choosing. Initially, a reduction in profits may be realized, as there will be more likely a need to be some sort of royalty payment made to the partner store or chain. However, as the brand recognition improves by being located in the store, we would expect revenue and profit to quickly increase. The fourth alternative that our team proposes is to reduce prices on the Vitamin Shop's products that aren't competitive with other retailers. While we understand that this could significantly impact profit margins, we believe that this will ultimately be more beneficial move in the long run. Lastly, the Vitamin Shop can refocus its strategy and efforts from its supply chain to its consumers. In today's day and age, the Vitamin Shop needs to expand on its marketing efforts in order to reach a wider audience.
We propose that the Vitamin Shop should combine a few of the alternatives mentioned before to formulate their new strategy to increase their sales and growth as a company. We are proposing that the company increase its bottom line by putting a focus on product availability and customer awareness and engagement. To do so, the Vitamin Shop must close down 100 of its lesser performing stores, focused on the stores with lowest sales, foot traffic, and other locations nearby. Given the more than 775 stores that they have, customers should still be able to locate a store nearby to them. And the Vitamin Shop would actually be able to decrease its labor, land, operating, and overhead costs. The funds saved from eliminating these costs can be channeled into other growth initiatives in the future. The second step to this plan is to increase product availability for the Vitamin Shop branded products in specific. While it may be costly to first partner with large popular retailers like Target, Walmart, CVS, and Kroger, doing so will ensure that the Vitamin Shop is making their products visible and readily available to the consumer. Increasing their exposure like this will lead to more customer awareness and sales. Lastly, we are recommending that the Vitamin Shop should utilize their strengths of building and maintaining relationships to create a community for their consumers. The company currently has a loyalty program for their consumers, but in other customer focused experiences like online presence and social media, they are lacking in content and engagement from their customers. The company can partner with influencers or with personal trainers, specialists, and fitness instructors to start offering exclusive classes and informational sessions at their store locations to their customer base. While this would make a significant amount of capital to set up, drawing customers to the store for an event or for regularly scheduled events will heavily increase the foot traffic in their stores and will boost sales. It will also ensure that their customers are, staying active and really coming back to stores over and over again. So overall, by targeting these problem areas and taking action based on our recommendations, the Vitamin Shoppe will be able to emerge as a strong competitor in its industry.
In the most recent year, Vitamin Shoppe has had a positive profit value of $13.54 million. By itself, a positive value is a good sign. However, looking back further, we see that Vitamin Shoppe has been consistently decreasing in profits since 2000 from $24.96 million value in 2016, with an especially high value of negative $235.33 million in 2017 due to unusual expenses. In the future, without any changes to their operations, we can expect a 5% decline in revenue per year and a $6 million decline in profits per year, leading to a negative profit value of $4.46 million by the year 2021. On the other hand, if Vitamin Shoppe does decide to follow our recommendations, they will initially have a lower profit value due to our new investments in advertisement. However, with the expected increasing sales and decreasing costs from closing stores, they will end up with a net profit of $19.5 million by 2021. In addition, in the past few years, Vitamin Shoppe's equity has been decreasing greatly, as they have been losing a lot more value in assets than in liabilities, and currently have an equity value of $188.34 million, compared to a more than double $440 million value in 2016. If Vitamin Shoppe continues to follow forward following our recommendations, they will have a decline in both assets and in liabilities due to the closing of their weaker stores. However, their equity value will level out in around $188 million, which will comprise of a much higher percentage of 2021's $336.18 million in assets than 2016's $756.05 million in assets.
In recent years, the Vitamin Shoppe has failed to focus on downstream opportunities with additional partners and consumers to maximize profits and sales. Today, the Vitamin Shoppe has a very strong online and in-store competitors like Amazon and Walmart. To be able to continue competing in this market, various alternatives and a strategic plan was devised to boost sales and eliminate unneeded operational costs. The plan presented in this case study is to close down a few of its lesser performing stores, offer its Vitamin Shoppe branded products in larger chain stores, and increase its customer engagement. As a result of the Vitamin Shoppe implementing our plan, we expect to see an overall decrease in labor, land, and overhead costs. An average of 10% increase in revenue year over year and a 35% increase in profits year over year are expected after implementing this plan. This is based on the expected increased sales and less expenses from closing some of the weaker stores. As we can see featured above in the pro forma statement, these charges are projected to increase the Vitamin Shoppe's bottom line by 50%. With our recommendations, we are confident the Vitamin Shoppe will be able to keep growing and become a strong competitor in its market.